So UK GDP contracted by more than expected in April. The economy shrank by 0.3% month on month. That was more than the 0.1% contraction that was forecast. Now, if we delve deeper into those figures, we see that the service sector contracted by 0.4% and manufacturing by 0.9%. Now, this is really paving the way for a weaker second quarter as consumer and firms basically navigate through rising unemployment, higher taxes, and Trump's trade tariffs. If we just take a look at the impact of Trump's trade tariffs, we know that in the first quarter of the year, we saw a stronger than expected growth of 0.7%. And that was very much a pull through as exporters or manufacturers rushed to export to the US ahead of trade tariffs. So in a bit, what we're seeing in April is some payback for that stronger growth in the first quarter. But then we do also need to keep in mind that there is some weakness that's showing up in the UK jobs market as well, following the Labour government's tax changes that came into place on April, which increased the tax burden on the employer. So I think all of this does pave the way for weaker growth across the year. Now, as far as the markets are concerned, there doesn't seem to have been too much of a reaction from the FTSE. FTSE is trading up at around the 88.50 level, still just below the all-time high of 89.10. So there is a little bit to go for upside to break above two fresh record highs. As far as the pound is concerned, interestingly, the pound is actually gaining against the US dollar. Wouldn't have necessarily expected that, but actually I think that's more of a US dollar weakness story than a particular strength in the pound. The pair's trading up above the 135 level, heading towards 136. That seems to be the key level. If we can get a break above 136, then that does bring 137 round number into focus, and that 137.50, a level that was last seen in 2022. For more videos like this, then please do like and subscribe.